IVM.
BQ Big Decisions, the Bloomberg Quint podcast that helps you make the right financial choices. Hello and thanks for tuning in. Budget 2019 held a few surprises, particularly for India's wealthy. It also had a few interesting tax breaks. Now, I understand that for a large number of us, tax is something that we'd rather not talk about. But like the homework that you had to do when you were in school, you're better off getting it done early. I'm Mathew and this is BQ Big Decisions. I have two guests with me, Arvind Rao of Arvind Rao and Associates and Gajendra Kothari of Etika Wealth Management, and they're going to take you through the big changes in the budget and what you can do with regard to your tax-saving investments. Thanks so much for joining us.
Yeah. Pleasure's mine, Alex.
Absolutely. All right. So I wanted to start, of course, by talking about the fact that perhaps this time around, a lot of people have postponed their tax-saving investments just to find out whether the budget, the full budget, would have anything for them. And maybe that made a little sense. But now that that's out of the way, they should really get done with their investments as early as possible. Right, Arvind?
Absolutely. I mean, now you're on the other side of the budget, and we know that whatever had to be done in terms of the tax savings announcements are done. So nothing really important to wait for now.
Absolutely. But, you know, Gajendra, we talk about this practically every year.
Right.
People tend to leave off on investments for tax-saving purposes and investments in general.
Yes.
But having said that, because we talk about it in the tax filing season, right?
Correct.
We say that, just before the end of the financial year, what are the last tax-saving investments that you can make? You can still save tax. It's the 9th hour, the 10th hour, the 11th or 12th hour. And so progressively the time really slips away. You would recommend getting it done right now?
Yes, completely no to leave at the 11th hour, because we've seen many investors, when they leave it, 31st March is just gone, and, then you realize that you lost out on 50,000 rupees, technically on 1.5 lakh, 30%, 50,000 is a lot of money. So I would really urge all our kind of, listeners that, now that the budget is over, you know what you have to do, which you have been doing anyway, to just pay off if possible, or to complete that exercise, the ritual right now without even waiting to time the markets. Many people do in ELSs, that they would like to time it. They think markets has hit all-time high of 40,000. Should I wait? I don't think it anyway matters in the long term. So just be done away with a lot of peace of mind, I would say.
All right. Absolutely. And one more important point there, gentlemen, is the fact that when you make your tax declarations at the start of the year, you have a little more income that comes to you every month. Because if you don't make those declarations, you're basically paying the full tax.
That's again a very important thing, particularly for the salaried executives. I've seen if you don't make it, then you get a little less amount every month. But if you do make it, and that's extra saving, which can help you plan for other investments. So,
absolutely. All right. So now that we know that you have to get, or you should ideally get, your tax-saving investments done early, let's talk about the changes that were introduced in Budget 2019 first. The headline that was introduced in the full budget, of course, was the higher tax on individuals with taxable income of over 2 crore rupees. Now, basically, the effective rate of tax on these individuals with income between 2 crore and 5 crore is higher now by about 3%, and it is higher by 7% on individuals that have taxable income above 5 crore. Now, there were also tax breaks for affordable housing, but we'll get to that in just a short while. But overall, the headline change for this financial year was introduced or announced in the interim budget and not the full budget, and that was the rebate on income tax for those earning a taxable income of up to 5 lakh rupees. Now, if you'd like to see any of these changes in more detail, I would encourage you to look up the website bloombergquint.com. For now, let's talk about the available options, gentlemen, for saving taxes. And I think by and large, the most popular option is Section 80C.
Absolutely. 80C is like the Bible for your tax savings. And since we have been talking about the budget, I think most important thing here is that budget has got a lot of recall in one's mind. So like Gajendra pointed out, this is the right time to start thinking about your tax savings. So I urge, I think, our listeners to at least make a budget for their tax savings for the year. And the good part is they don't need to finish all of it now. But as it is said, without a budget, you may not really get going. So at least let's get that on paper, and then you just need to merely implement it as time passes during the year.
Gajendra, you have a point.
As Arvind mentioned, 2 lakh rupees you have the leeway, 1.5 under ATC and then 50,000 additional in NPS. 2 lakh is a lot of amount to leave at the last moment.
Right.
I've seen many salaried people, they don't have that kind of money then, and they have no choice but to pay the taxes then.
That's actually a very fantastic point, because cash flows in terms of how much money you have available to make those large investments.
And as we discussed earlier, many people, they declare right now in the income in the declaration form that I'll be doing those investments, and if they don't do, suddenly in the Jan, Feb, March, you get very low amount of cash flow in hand from your employer, because they have to deduct taxes compulsorily.
Yes.
And then you can't do any such investments. So I think, start planning right from now, and 2 lakh divided by 12 months is roughly 15 to 17,000 per month. That can be in the form of SIP, both in NPS and in other options which you
Absolutely. Arvind, you have a point?
And it's definitely a bad idea to borrow and save for your tax saving.
Oh, very good point. Excellent point there. We'll come to that perhaps at the end of this conversation, but I do want to talk about ATC, and it's really very easy. You mentioned 2 lakh divided by 12, but I would think that a large portion of your ATC is already taken care of if you're a salaried employee, because you make contributions, or rather your employee on your behalf makes contributions to the Provident Fund.
Yeah, right. So that is, of course, there. But, many times we don't add up the numbers, and sometimes you may have a shortfall there by 50,000 or 40,000. So you need to do this exercise right away to make sure that if there is any amount left, you better plan it by putting in ELSS or PPF or whatever options you have.
So just a point to our listeners, hopefully you've gotten a really lovely appraisal, and your increments have been fantastic this year. A good idea would be to speak to your HR executive and identify how much your contribution is to the Provident Fund for the entire year. And what you have to do then is subtract that from 1.5 lakh rupees, and really that is the amount that you have to invest to save tax under ATC. But Arvind, there are several options available under ATC. Let's list them out.
Sure. I think the next thing we have to keep in mind here is that your kids also help you save tax.
Sure.
Yeah. And that's why, when you pay their fees, people generally forget that this school fees or the tuition fees is one integral part in ATC.
Sure.
So trying to check out ways, like you mentioned and Gajendra mentioned, that PPF
that's a public provident fund.
I meant the PF is the first option. Now, this is something when you talk in terms of cash flow, is money that you don't see already because it is getting deducted at source. Likewise, tuition fees is that category of expense which you are incurring and is entitling you to take a tax break on it. So, in my view, if both these put together, and of course, like today, school fees are really not that cheap. So if both these put together, in most cases, I have seen that it easily exhausts your 1.5 lakh. So you really don't have to go beyond it.
But there are, I'm sure, several of our listeners who are, not married perhaps, or married and don't have children. What do they do?
So it's time to budget for them now. But anyways, it may not help them in this financial year. So then they need to look beyond the other options. For the people, we will come to the equity-linked schemes as well, but there are people who are wary of equity-linked. So we're talking about the traditional instruments. You have the PPF, which allows you to invest up to a lakh.
That's the Public Provident Fund.
Gives you a limit to invest up to 1.5 lakh. You have a government instrument, National Savings Certificate, wherein you can invest up to 1.5 lakh.
Okay.
In addition to these two, you also have the bank FDs, where you are allowed to invest up to 1.5 lakh. It's a lock-in of 5 years, and it gives you a tax break. A point to add here for senior citizens who are required to make the investment of 1.5 lakh is the investment that they make in the Senior Citizen Savings Scheme, which is an assured return scheme by the government. Also qualifies for the benefit under ATC.
And particularly if you are looking for a higher rate of return, because PPF also gives you 7.9, and in today's interest rate scenario, the senior citizen savings schemes gives you around 8.6%.
Okay.
Imagine a senior citizen who doesn't come into the 5 lakh tax bracket, that 8.6 virtually is tax free.
Okay, Arvind?
And an interesting point here to add to Gajendra's thing is that mostly PPF, other than bank FDs, these tax saving instruments lock away your money.
Right.
And for senior citizens, what matters is the money should keep coming.
Availability of money. Yeah.
So the senior citizen scheme gives you a quarterly interest payout as well. So it's not that they are locking away money and not seeing it for the next 5 years.
A couple of points under ATC which I think we've missed out is that you can also pay the principal on your home loan and include that in ATC contributions. There's also life insurance premiums that you can add to ATC. And if I'm not mistaken, there's also a contribution to the National Pension Scheme. Which, interestingly, and this was introduced a couple of budgets back, you can make additional contributions, which you mentioned, to the extent of 50,000 rupees under Section 80CCD. Now, the name of the section really isn't important.
Correct.
The amount of money that you can save is important.
Yes.
Would you recommend doing this?
100%. For many reasons, in fact, see, all of us, usually exhaust our 1.5 lakh every year through different means. But this is dedicated for NPS only. So you have to start. And 90% of the taxpayers whom we see, they don't know about this, so they miss out on this.
So you want to take people through the National Pension Scheme? What are the highlights of it?
It's a very simple, it's a product meant for your retirement sunset years.
Sure.
You contribute 50,000 rupees every year. You get complete tax break.
You can do more than that.
You can do more than that, but tax break is limited to 50,000 on that thing, which is decent enough.
Or if you, as I understand it, Gajendra, you can make investments in the NPS, and if you have, say, your Provident Fund contribution, and if that is less than 1.5 lakh rupees, you can actually make the remainder in ATC into the NPS as well.
Absolutely, because even under ATC, you have right up to 1.5 lakh in NPS.
Yeah.
Additional 50,000 under ATCD too. So 50,000 at least you must do, and you can't withdraw this money before you touch 60.
Right.
And you have plenty of options like equities, debt, corporate debt or government securities. Right now, you can go up to 75% in equities.
Okay, so what you're essentially saying is that you're allowed to choose how much exposure you can have to each of these asset classes within the NPS.
Precisely, which is not available in EPF or Public Provident Fund. Public Provident Fund is complete debt. EPF also, they've recently started 5 to 10% incremental investments into equities, but here up to 75%. And this is where compounding will really work in your favor, because you have a long, runway to that. And now this year, one more thing which has come is up to 60% of the withdrawal is tax-free.
Yes.
You can withdraw at the time of your, retirement, up to 60%. The remaining 40%, of course, you have to compensate by an annuity.
Absolutely. So, in fact, I was getting to exactly that. It's not going to be a small amount. It's going to be a substantial amount that you get.
Yes.
Because usually, assuming that somebody starts early, you're going to be saving for a good 20, 25 years.
Yes.
And the amount that you accumulate, assuming a minimum of 50,000 rupees is going to be a substantial amount.
Absolutely.
So 60% of that is going to be tax-free. 40% you invest in annuity. And of course, the annuity contributions per month are going to be taxable, right?
Absolutely.
As per your
slab rates.
Slab rate. All right. I think that more or less covers ATC and ATC-CD. Does it not?
Alex, I like to open up one avenue under ATC, which is mostly people are unaware of. And it also resonates with the whole hype in the today's budget, which has been about the first-time home buyers.
Sure.
So ATC says that the stamp duty and registration fees that you pay when you are registering your home agreement also qualifies for ATC.
Yes.
Oh, I didn't know this.
Yeah.
So
that's interesting.
In the year in which you are registering your agreement, you may actually not have to do anything other than your probably EPF, because the stamp duty and registration is a flat fee of almost 30,000.
Yes.
And I think if you add your stamp duty, it will easily cover your lakh and
Of course, it depends on the size of the property, and most of the time it's significant amount. Yes. All right, so that more or less covers ATC and ATC-CD, and this is by and large the most that anybody ends up doing, which is unfortunate, because the next section that I would like to talk about pertains to health insurance, and we all know how important health insurance can be.
True, absolutely.
So you say, do you recommend that we should go ahead with health insurance. I've had one or two experts come onto this podcast, in fact, or this podcast series, and say that you can even postpone your investments before in order to get insurance. Is that something that you also ascribe to?
I think tax break or not, medical insurance is absolutely essential, and people should be happy that the Act gives them a break for that.
Sure.
So definitely yes, ATC investment may for the time being wait, but normal, I mean, I'm sure why the expert would have said this is because typically people keep the medical insurance at a lower priority.
Sure.
That should definitely be up on the priority list, one. Second, Alex, I would like to add here that a couple of years back, ATD has introduced an interesting element in it, which is you even get a deduction for the preventive health checks that you do.
Sure.
Up to 5,000. If you are into the habit of doing an annual health check, you can claim that expenses as well under ATD.
That's interesting. I just want to make sure that we're all on the same page with regard to the extent of deductions. By my understanding, if you are not a senior citizen, you can claim up to 25,000 rupees worth of deductions on your health insurance premium per year. And if you have senior citizens at home, you can claim up to 50,000 rupees worth of deductions. Am I right?
If you have senior citizens at home and if you include them in the policy.
Right.
And,
exactly, of course.
And if they're dependent on you.
Oh, okay.
Yeah, if they're not, if they're having their own income, then it doesn't qualify.
Understood. All right. So these are the stipulations. Of course, if you're a senior citizen yourself, you can claim up to 50,000 rupees.
Yes.
All right. So that more or less covers health insurance. You must go out and get it. I think one of the things that really causes people to hesitate is the fact that their employer is providing them with a Mediclaim policy.
Right.
Or a health insurance or group policy. But in those cases, I've very quickly, to close this point, I've heard a lot of experts say that perhaps you should consider a top-up plan.
Yes. So even a top-up plan or a basic standard plan, you don't have to go for a higher cover of 10 lakhs or 20 lakhs, maybe a 3 or 5 lakh standby cover, because, what if you are in between jobs, and then that point of time you are exposed. So if you have a 3-5 lakh cover, that helps you, immensely at that point of time, and it doesn't cost you a bomb. It's hardly 10-15,000, which anyway comes under a broad basket of 25,000 rupees. It also, and now many of us are employed, but there are many people who are self-employed,
sure,
and businessmen, they completely forget about this. And any such eventuality, coming, and if it costs 3-5 lakh rupees, the entire plan goes every, So it's a must. Whether you get a tax break or not, it should come right up on the top list.
Absolutely. All right. So that's covered section ATC, ATCCD, and ATD. Now, I'm sure that this sounds like gibberish, but, if you listen carefully, I'm sure you'll understand. Let's talk about another one. This is section 24, and this is pertaining very simply to home loans. And specifically the interest that you pay on home loans. If you make interest payments worth up to 2 lakh rupees, you can claim deductions from your taxable income. This is something that a lot of people can make use of, Arvind.
Absolutely. I mean, the interest could be more. The deductibility is restricted to 2 lakhs.
But that's changed, hasn't it? In Budget 2019, Arvind, we have a situation where under a different section, and in order to bolster affordable housing, I mentioned this at the start of the conversation when I talked about the changes introduced by the new finance minister. She's essentially talked about an additional 1.5 lakh rupees worth of interest cost or interest payments per year that you can claim. But the catch here is that you need to buy that property this year, and the ready reckoner rate, or the circle rate as they say, should be 45 lakh rupees and not more.
Not more, correct.
Right, so the announcement in Budget 2019 takes the total available deduction for interest payments on your first home to a total of 3.5 lakh rupees. But I think we were discussing just before we started recording this podcast, Arvind, it's very difficult for you to reach that number. So, I think the calculation that you came up with is you can perhaps get to a maximum of 2.8 or 2.9 lakh rupees worth of interest payments.
Absolutely. I mean, that's when I say housing is affordable, right?
Well, when you put it like that, yes. Interestingly, gentlemen, we spoke about this not too long back on BQ Big Decisions. The decision to buy a house is a really emotional one, beyond just a financial decision. So, I would encourage our listeners to listen to that conversation as well if they're thinking about buying a house. But I want to throw the floor open to one last question, and that is, are there any other avenues to make tax-saving investments?
Yeah, there is one quite popular nowadays. It's under Section 80E, the interest on the education loan. So, if you take a loan, any amount as interest you pay every year is completely tax deductible.
Okay.
So that's a great deal. You straight away bring your cost down from whatever 10% to sub 7-8% because of that benefit. And you can use it right till 7, 8, 9 years of the duration of the loan.
8 years, if I'm not mistaken.
Right. Yes. So I think that's a very encouraging thing. I would really recommend most youngsters who go for these courses should use this.
And this is on the interest payment, is it?
Interest payment completely.
And there's no cap.
There's no capping on this.
Arvind, you had a point?
To add to this, the sweetener is not only education loan for self, even if you're borrowing for your spouse or your children,
right,
that too qualifies for the 80E benefit.
Oh, fantastic. All right. Yeah. So this is really something that a lot of people should make use of, especially if they're considering education for themselves abroad or maybe their spouse or their children. Arvind, you had any other points to make?
We cannot forget that generosity is also rewarded.
Absolutely.
So donations that you might be making also helps you get a tax break under 80G.
Okay.
So whether you have donated last year for the Chief Minister's relief fund when the Kerala was really seeking funds, or whether you make donations to a lot of these institutions like CRY or even some of the local institutions who qualify and have what is called as an 80G certificate.
Yes.
So depending upon the institution, you might either get 100% or a 50% break on the amount that you donate. Just a small point here, donations in kind do not qualify for deductions under income tax. It's only donations in cash.
I think, gentlemen, we've given our listeners a lot of ideas that they can use to make their tax-saving investments really early and really enjoy the rest of the year. Perhaps even watch some of our programs and decide on financial goals that could help them out in the future. Thanks so much to both of you for joining in on this conversation and helping our listeners.
Sure.
Yeah. And to you, my dear listener, thank you so much for joining us on this conversation on BQ Big Decisions. I hope it did help you out. Do go out and make your tax-saving investments early. It'll help you out. Thanks so much for listening. This is Bloomberg Quint.
If you enjoyed Big Decisions, check out some other podcasts on the IVM Podcast Network. You can check out Paisa Vaisa, hosted by Anupam Gupta, Advertising is Dead, hosted by Varun Dugirala, the Ronnie Screwwala podcast, hosted by Ronnie Screwwala, or Cyrus Says, hosted by Cyrus Procha. These shows are available on the IVM Podcast website, app, or wherever you get your podcasts from.
Are you constantly seeking happiness? Wondering how to make the most of every day? How not to let your inhibitions stop you from achieving your goals? It's now time to get your A-game on. It's time to unlock your true potential. Tune in to the Empowering series with me, Zarina Poonawalla, to feel empowered in all genres of life. From behavioral skills to management skills. From health to relationships. From mental well-being to emotional well-being. And of course, your finances. I've got you covered. With these tips and tricks from me, Zarina, and true life stories from my amazing guests, you're bound to bring your purest to the table. Tune in to the Empowering series with Zarina Poonawalla every Thursday on the IVM Podcast app, website, or wherever you listen to podcasts.
Filter coffee is a fascinating beverage. You need to pick the right beans, blend them in the right proportion, roast them to perfection, and slow brew at the right temperature to get the perfect cup. Which is exactly like great conversations as well. You need to track down the most interesting minds, get them into their zone, and settle down for an unhurried, unscripted chat. And coffee for me is always, always, always best enjoyed with friends. I'm Karthik Nagarajan, and do share my table as I meet some of the most interesting people I know and sit them down for a strong cup of coffee and an even stronger conversation. Join me every Wednesday for a freshly brewed episode. This is not frappe. This is the Filter Coffee Podcast.